Once again, welcome to Both Study Center. And today we are going to continue with our accounting equation. Last time we looked at one of illustrations, and even today we want to look at another illustration. But remember, our accounting equation is assets is equal to liabilities plus owner's equity. So let us look at our illustration or our example 2. They are saying the following information related to XT Trading Group for the month of February 2025. So we have our transactions A, B, C, D to H. So here they want accounting equation. They want us to do accounting equation for each transaction. So we are going to start. We are starting with part A. Part A, they have said this person, XT Trading Group, began a business with shillings 16 million in a bank and bought a personal motor vehicle worth 20 million to be used in a business. So it means this man started with two things: capital worth or cash at bank worth 16 million, and also started with 20 million to be used in a business. This is the start of the business, when he was starting the business. So here we are going to work out these two transactions, but remember, each transaction must state our accounting equation. So we are starting with our part A. So we are going to first state our accounting equation, where it is assets is equal to liabilities plus owner's equity. When you check here, he began a business with shillings 16 million in a bank. That means he began a business with amount of money worth 16 million at bank. So here we are going to have under assets bank. We have bank 16 million. Then he also started a business with a vehicle worth 20 million. So here also we have motor vehicle. $20 million. Yeah, so this business started with cash at bank of 16 million and a motor vehicle worth 20 million. And when you check, there are only two transactions at part A. So we are going to go to under liabilities. We don't have any liabilities, so we shall have 0 plus under owner's equity. Here we need to see which capital did they start with, because like when you check in our first video about accounting equation, everything shows how you can come up with the accounting equation, everything. So under here we have our capital. And our capital we have we have our capital. So here we have our capital. The first one we have the one of bank, which is 16 million, the one we have in cash, but it is in the bank. Then we have another capital. This is for motor vehicle. What? 20 million. It is 20 million. So that is our transaction part A. So here we are going to first get our total. When you get 16 million, we are under assets. 16 million plus 20 million, you get 36 million. When you get, then when you come here, when you get liabilities, which is 0, plus capital of 16 million bank and 20 million motor vehicle, we get 36 million. So that is our part A. Now let's go directly to part B. When you check part B, they said purchased iron sheets for sale at shillings 8 million by check, which were kept at a warehouse. It means out of the other amount of bank, he used 8 million to purchase iron sheets. That means here we are going to the balance of bank is going to reduce by 8 million. Then we shall have inventory as iron sheets. So I'm going to go back and do. We are going to first state our accounting equation, which is assets is equal to liabilities plus owners equity. So from our question, he purchased iron sheets. That means this guy was dealing in iron sheets. Yeah. So here we are going to have our motor vehicle. We have our motor vehicle. What? 20 million? Yeah, we are repeating the first thing for part A. Remember accounting equation. Each transaction is connected to the first one. So our accounting equation is 20 million. No, our motor vehicle is 20 million. Then when you come here to bank, thou said he used part of amount of bank to buy iron sheets. That means we are going to get 16 million of iron sheets. We raise 8 million of iron sheets. We shall remain with 8 million. Remember, this is 16 million. It is a balance of bank from our previous transaction. But here they said they purchased iron sheets worth 8 million. So when you get 16 million and you raise 8 million of iron sheets, you remain with 8 million. Then remember, I used those 8 million to buy iron sheets. So we have our event, but this event it is in the form of iron sheets. This one, the one we bought, this one, the iron sheets of 8 million by check. They are said by check. That's why we are subtracting it from bank. So here we are going to record. Here we are recording our 8 million. So when you check, we don't have any other transaction. That means we shall going to have equals. We have said our total assets is equal to liabilities. Do we have any liabilities? No. So we are going to put 0. We add owner's equity. Do we have? Yes, we have. We have our capital. But we have said our capital we have 2. The one for bank, another one for motor vehicle. So when you add that capital, you get 36. So here we are going to get our total. So we are going to get our 20 million plus 8 million for bank plus 8 million for iron sheets. We are going to get 36 million. Then owner's equity plus 0 liabilities we have 0 plus owner's equity, which is 36 million plus 0. We shall get 36 million. So that is our part B. Now let's go to part C. Our part C, they have said he bought computer of shillings 2 million for office and paid by cash to supplier. Still the same amount of bank. He used that amount also to buy computer. It means we are going to have a computer, but also still the value of bank will reduce by 2 million. So now let us also tackle this transaction. So now we are going to coming back to our working place. So here we are going to first to state our accounting equation, which is assets is equal to liabilities plus owner's equity. So we still have motor vehicle, what 20 million. We have, when you check up, we have inventory $8 million. Then we have, after inventory, we are going to put our computers. They have said they bought computers worth 2 million. Then we have our bank. But remember, our bank, it was the remainder which was still there, it was 8 million. We raise 2 million, the one we used to, the amount we used to buy computers, because they have told us they bought computers here. They have told us they bought a computer of shillings to 2 million for office and paid by check. So that's why we are removing it from bank. But when they say it was paid by cash, we use cash to pay that computers. But when they say they bought it by bank, that means they used by check. They used bank to pay that amount. So we are going to first remove 2 million. By. So when you get 6 million, 8 million, less 2 million, you remain with 6 million. Yeah, so we have a motor vehicle of 20 million, event of 8 million, computers 8 million, bank 6 million. So when you check, we don't have any other assets. I told you these things for accounting equation. You first see, do you have the details that you were having in previous question? For example, in B we're having motor vehicle, bank, event. We have them, and when you check our question, we have tackled it. So it means we don't have any other assets. So still is equal to, remember it is assets is equal to liabilities. When you check under liability, we don't have any, plus owner's equity, we have capital worth 36 million. So that is our transaction for C. It means we're going to first get our total here, which is 32 million plus 20 million plus 8 million, that is 28, plus 2 million, that is 30 million, plus 60, 36 million. So here we have 36 million. $36 million. And also here, when you get liabilities, which is 0, plus owner's equity, which is 36 million, you get 36 million. So that is our transaction for part C. Now let's continue. We are going to part D. We are going to part D. So here we are under part D. But also, of course, remember, even before going to read the question, okay, let's first go and read the question. When you check part D, they said obtain a bank loan from Tukwale Sacco worth shillings 25 million, and it was deposited on bank account. That means bank was gaining from what? From loan, because he got a loan. So we are going to, under liability we shall put loan, then under bank we shall debit it. So we shall add, the value of bank is going to increase. So let us also tackle this question. You obtained the loan. So here we are going to have first thing, we are going to first state our accounting equation, which is assets is equal to liabilities plus owner's equity when you check under assets, our assets, it is only bank which is affected. So we are going to first write these ones. We have motor vehicle, worth 20 million. We have inventory, $8 million. We have computer, 2 million. Then we have our bank. When you check our bank, we were having a balance of 6 million here at the bank. Here we're having a balance of 6 million. That means we are going to first get 6 million, the balance of bank. We add the amount he deposited, this amount where he said he got a loan, bank loan from Tukole Sacco worth 25 million. So here we are going to add 25 million for bank. Yeah, we are going to add 25 million. The one for bank, because they have said it was deposited on bank account. If they say it was, maybe it was given by cash, there you add it on cash, but here it was deposited on bank account. So we have our 25 million. So when you check 6 million plus 25 million, you get 31 million. So right now, when you check after this transaction, our bank account expanded to 31 million. But when you check, we don't have any other assets, so we are going to get is equal to, remember it is assets is equal to liabilities. Now after assets, after all assets is equal to liabilities. This time we have liabilities. Under liabilities we have bank loan. From Tukole, from Tukole Sacco worth 25 million. So this is a liability, maybe, and remember liability, anytime when the time reaches, you repay. You will clear that liability using business resources. It means here it can be long-term liability, non-current liabilities, or current liabilities. But what we know, a liability, a loan is a liability. Today we are receiving money, but anytime when the period comes, we are going to pay. So that is our liability. Do we have any other liability? No. So we are going to add owner's equity. We still have our capital of how much? 36 million. So we don't have any other transaction. Now let's add. When you come here, in short, when you come here, we have 2 million plus 20 million plus 8 million plus 2 million plus 31 million. shall get 61 million. So that is our total assets. When you come here, under our owner's equity and liability, do we have liabilities? Yes, we have bank loan, which is 25 million plus capital 36 million. You get 61 million. So when you check, our accounting equation is still balancing. Now we go to next part, which is part E. When you go to our part E, they said he withdrew cash of shillings 2.5 million for business use. Still, this cash was going into a business. So here cash was gaining from bank. It means our bank account is going to reduce. Our bank account is going to reduce by 2.5 million, and our cash account is going to gain by 2.5 million. So let us work out this. So first we state our accounting equation, which is assets is equal to liabilities plus owner's equity. So when you come here, we still have our motor vehicle worth 20 million. We still have our inventory $8 million. Still have our computer $2 million. Then when we come to bank, they have told us when you come to bank, our question here, it is affecting, but because they have said they withdrew cash for shillings 2.5 business use. Of course, when you withdraw, it means maybe you are withdrawing from business, maybe you are withdrawing from bank account. But when you check here, they withdrew cash to put into business. That means it was withdrawing from where? From bank account. So we are going to come here. When you check here, it is bank account and cash account that are affected. So we shall come here and say bank. Our bank balance to 35 million. No, to 31 million. With this, with this 2.5 million, the one they withdrew, and we shall remain with 28,500,000. Then so at bank we have 28,500,000. Then of course they withdrew that cash. Remember 2.5, the one we have removed from bank. It means here we have our cash of 2,500,000. And when you check, we don't have any other assets. That means we are going to complete our accounting equation where it is assets is equal. Now we go to our liabilities. Still, our liabilities, we still have our bank loan from Tukole. Our bank loan, when you check here, our bank loan was 25 million. So that is our bank loan. Those are liabilities, and we don't have any other liabilities. So we shall add owner's equity. Under owner's equity, we still have our capital worth 36 million. Yeah, so when you check, those are our transaction for part E. So here we are going to add. When you add, it means our total assets, we are going to have 61 million. When you add, it is 61 million. Then also this side, liability plus owner's equity, bank loan 25 million plus capital 36 million. Still we have 61 million. So that is our transaction E. Now we are going to another part. Another part is part F. Part F, they have said the owner picked iron sheets worth 2 million and used them to roof his family house. In business, when you take something from business, and maybe you can take money and say, maybe I have bought a vehicle for business. Maybe I have taken something to go and eat at home. Maybe any, as long as it is not for business purpose, that means you are reducing the amount in business. If it is inventory or it is a commodity, it means you are reducing inventory. When it is cash and you are taking it for personal use, it means you are reducing cash. When you are withdrawing it from bank and you are taking it for business use, like for family use or your personal use, it is withdraw. You are reducing the amount of and this withdrawal always affects our capital, because when you take amount from business, you are reducing capital and also the assets, they are reducing. So when you check this transaction, they used iron sheets to roof his house. It means he reduced, inventory is going to reduce, and also capital is going to reduce. So so here we are going to work on transaction. When they've told us it is inventory which is affected and capital. That means towards our part. So if it is part F, that's first to state our accounting equation, which is assets plus liabilities assets is equal to liabilities plus owner's equity plus owners equity. So let us do our transaction. Shall come here. Of course, we are starting with our motor vehicle worth 20 million. Now, under accounting inclusion, you first state what you have. As of course, for the business, it continues. Every day you make transactions. When you have business, every day you make transactions. You buy products. You buy what? Sell what? Like those things. It's like accounting equation. For accounting equation, you don't remove like when you work for something. No, it's like a business. When you buy sodas, when you buy any other things, it depends on type of business or specific business you are operating. But every day you do transactions every day. And here under our accounting equation, it's as if we are running like a business. Every transaction that you do, it affects your business. And even here, every transaction that you do, it affects our accounting equation. That's why we state each and every transaction that we have. So we have our motor vehicle, which is 20 million. Then we have said our inventory, which was iron sheets. Remember our inventory, they were iron sheets, and they have told us iron sheets in which there were 8 million. This person took iron sheets worth 2 million to roof the family house. That means under our iron sheets we remained when you get 8 million, you raise 2 million, we shall remain with 6 million. That means our inventory will remain with 6 million. This person took 2 million iron sheets from business. The iron sheets worth 2 million, it was from business, and a person took them for roofing of his family house. Yeah, so after inventory, computer did not change, still have 2 million computer. Then we have bank did not change, we still have 28.5 millions. Still we have cash did not change, we still have 2.5 million. Yeah, so those are our assets. Still when you go to liabilities, when you go to liabilities, our liabilities, we have bank loan. We still have our bank loan, 25 million. Plus remember it is assets is equal to 25 million plus owners equity. We still have our capital worth 36 million. So this capital 36 million, we shall raise drawings. So here our capital shall have 36 euros. Our drawing they'll say the iron sheets worth 2 million. 2 million. So our capital will remain 34 million. Yeah, so that is our part. We are on part F. So those are transactions because with the affected inventory and capital, and we have worked on it. We have said drawing is if it is out of business, if it is personal use or any other use, not business purposes, that is we consider it as the withdraw. We withdraw from inventory or anything. Maybe if they say the company or a business motor vehicle was taken for personal use, it means you come and reduce the value of motor vehicle for business and also reduce on capital so that you can remain with what we have in business, because we say business is accounting equation, it is saturating on business. So when you come here, we are going to add. We are getting total. When you get to 20 million plus 6 million, 2 million plus 28.5 million plus 2.5 million, there we shall remain with 59 million. Also you can add, but what you know, it is 59 million. So that is our part F. That is our part F. Now let's go to another part. This one. Now they have said the remaining iron sheets were sold to a customer on credit at a markup of 25%. When they say markup it's like a profit. It means that the remaining items or event or roofs, iron sheets, they sold them at a markup of 25%. That means let us first do it from here. This one we are going to consider it as a profit or markup, of course, to get a real value here. Yeah, to get the remaining iron sheets were sold to a customer on a credit at a markup of 25%. So here we want to know. Here we want to know. Yeah, so here we want to know the amount of money this person took, because they have said this person bought these goods on credit. That means we want to know the real value of a data. The person who bought our goods. But to get this amount, we are going to get amount of inventory, the remaining amount of inventory, plus markup. But also to get our markup, we are going to get our inventory. we multiply by 25%. We are still under markup, and they have told us inventory it is inventory. We have 6 million. Yeah, our inventory here, where it is here. Our inventory it is here, 6 million. So we have our 6 million. Our 6 million, you multiply by 25%, and we shall have our markup of 1,150,000 shillings. So the real value of data, because I want to know the amount of money, the amount of goods, they are worth how much when they sold this data, because they have told us this person took goods on credit. This customer took goods on credit at a markup of 25%, but we have said 25%, which is a markup, it is a profit. So our data, remember we said data is a person who takes goods from business on credit. So anytime we bring back money, he will pay, or he or she will pay. So here our data, we are demanding him 6 million plus 1.5 million. And we shall get 7.5 million. So 7.5 million is the value of data. Then this markup 1.5, we shall record it as a profit. So I think you are getting markup. They'll say the meaning iron sheets, they were sold customer on credit at a markup of 25%. And we have said a markup is something that you can add on something. The one we have added on, that is a profit. It means we are going to first get to 25 times our remaining event or iron sheet, which is 6 million. We get 1,150,000. It means they added 1,500,000 on that previous event, or the remainder of event, to get what they sold to a data. And we have said the data, it is a person who takes goods on credit from business or a customer. So that is our markup. But also, if the person buys goods, maybe can buys by cash. When it is cash, you don't record a data or accounts receivable. We just record it under cash. The reason why we record data or accounts receivable is because this person took goods on credit. So we are going to come on our question. It was part G. Part G. Again, we shall first state our accounting equation, which is assets is equal to liabilities plus owners equity. So here we have motor vehicle worth 20 million. Event, this time we don't have event because they were sold. And we said they were sold on what? They were sold on credit. That means today we have debtors. And we have calculated the amount they sold this one. We have calculated it and we have said this data took goods worth 7.5. And remember I said this thing. We have a markup of 25%, which is a profit. So we have here we are going to record our data, which is 7.5 million. Then of course I think they are constant because they affected on that. So we have computer worth 2 million. We have bank worth 28.5 million. We have cash of cash 2.5 million. And we don't have any other assets. So is equal. When you come to liabilities we still have our bank loan worth 25 million. We don't have any other liability, so we are going to add owner's equity. Do we have? Yes, capital. But remember, capital used to 34 million. A balance, we have 34 million. Also we have profit, the one that sold goods. One for debtors. Yes, a debtor is not yet paid us, but anytime we expect money, yeah, this person is going to pay and receive our profit. But we need to show that even though we have not received it, but anytime we shall get it. So we have to record profit of 1.5 million. So that is our transaction for part G. So when you get everything there, you come and add. When you get 20 million plus 7.5 million plus 2 million plus 28.5 million plus 2.5 million, shall get 60 million 500. Then also this side, your credit side, when you get 25 million plus 34 million plus 1.5 million, you still get 60 million 500. So that is our part G. That is our part G. Now when you check, let's go to the next question. And it is almost the last question. They have said the same person paid rent for his personal use at shillings 2 million by check. Still, this is a withdrawal. He used business money to pay rent for personal use or personal house. So this one is a withdraw. We are going to treat it as withdraw. It will affect bank to reduce bank and also to reduce his capital. So here on part H, where he withdrew 2 million to pay rent, or he paid rent, used worth 2 million for personal house. So it will affect bank. So here we have motor vehicle. No. Before we first restate our accounting equation, which is assets is equal to liabilities plus owners equity. So here we have our motor vehicle, $20 million, have debtors. They have not yet paid us, so we still have them in our business. 7,500,000. Then we have our computers. We have our computer worth 2 million. Anyways, we have bank. Yeah, they said the money they used for rent here paid rent for his personal house at shillings 2 million by check. He used 2 million to pay his personal house, but he withdrew from bank. So we are going to bank and withdraw 2.5 million. So we are going to come here, bank. The balance for bank was 28 million. Whereas 2 million. And we shall get we shall get 26 million point 5. So that is our bank. Then we have our cash. We have our cash worth. Remember this 2 million we have said is the one we used to pay rent for personal use. This one, the one we used paid rent for his personal house at shillings 2 million. And we have said that one we consider it as a withdrawal. Then we have cash. Still our cash is still the same, 2,500,000. Then when you check, we don't have any other assets, so we shall say quote liabilities. We still have our bank loan. worth 25 million because we have not yet paid it, so they are still owning us 25 million. Do we have any liability? No. Plus capital. Shall get capital. Under capital, remember capital we have 34 million. Whereas 2 million, the one we used to pay rent. So our capital will be 32 million. Then also we add our profit, which is 1.5. So here when you check, we don't have any other transaction. So here we are going to get our totals. When we get 20 million motor vehicle plus data 7.5 plus computer 2 million plus bank 26.5 plus cash which is 2.5, remaining with 58.5 million. And also here is the same 58.5. So that is our question. Yeah, this is our question for today. Yes, the things for accounting equation, they have a lot of questions. As you have seen, it is almost to business. It's like operating a business. So when as you know, business does endless transactions. So any transaction that you get, you see how to handle it, as long as you know where it lies or which account it affects, whether it affects assets, whether liabilities or owners equity. Yeah, from this one part A, part B, this one part C, part D, and we go to this one F, G, yeah, final H. So that's for today. Next time we shall meet in another topic or subtopic. And remember, share to a friend, subscribe, do whatever it needed, do whatever it needs to do. That is for today. And always keep touch with Both Accounting, Both Study Center. At Both Study Center, we educate. We meet in another topic.